I am Lemae. Thank you guys so much for joining. And right beside me is
Shakira. Hi, everyone. Hope everyone is doing well tonight. We have a lot of information to give you guys, but we're also going to pass it along to Kaisha as well. Hold on.
Hey guys, welcome, welcome. I hope you guys are ready to figure out how we can help you get 100K to secure your first home. I'm going to go ahead and introduce Budu Khan with Nationwide Mortgages, and he's going to go over a little presentation to let you guys know how you can qualify for the 100K so that we can get you started in your first home. All right, Budu, you can take the floor. Oh, Budu, you're muted. Hold on, let me unmute you. Budu, you're still muted. Okay,
I
awesome.
should be fine now, I think.
Yes.
Hi, guys. I'm going to tell you guys the easiest way to qualify for the NYC HPD grant. It's very simple. You must purchase a house within the five boroughs: Brooklyn, Queens, Staten Island, the Bronx, or New York City. You must be a first-time home buyer. The grant, as far as they're concerned, want you to have a minimum credit score of 620, in addition to which you must contribute at least 3% of your own money towards the purchase of the house. To qualify for the grant, they have what are referred to as an income to household limit. For example, a family of one cannot make more than $136,080, and a family of two household cannot make more than 155,520, and then they go up to a household of eight. All that simply means is that as long as you make less than that household income limit, you would automatically qualify for the grant, as long as you are a first-time home buyer buying either a co-op, a condo, a one, two, three, or four family house within the boroughs. It has to be for first-time home buyers only. It has to be owner-occupied property, which means that if you have had an ownership interest in a house within the past 3 years, you would be automatically disqualified. In addition to that, the grant has a limit as to the price you can pay. So, for example, in Queens, they cap you. You cannot purchase a one-family house for more than $684,000. In the Bronx, they limit you to $636,000. And in Brooklyn, and I'm just going through the main areas, in Brooklyn for one family, they cap you at $712,000. To apply for this grant, the process is very, very simple. You reach out to me. I'm going to make sure that you are pre-approved for a mortgage, depending upon what price we're looking at. Once I pre-approve you, I would give you a pre-approval, and then I would get you in contact with the counselor from NHC, who in turn will sit down with you and go over your documents to decide, based on your income and based on your credit, whether or not you would qualify for their grant. Once you qualify for the grant, the next step is they would do what they refer to as a home buyer course. It's via Zoom. It's normally 2 days. It's like 4 hours each. And they tell you that you need a lawyer, why you need a home inspector, why you need a real estate agent, why you need a title company, and all those type of things. The bottom line is, once you meet the household income threshold, you have a 620 score. You're buying a house within the boroughs, and you're a first-time home buyer, you would easily qualify for this grant. That, in a nutshell, is as simple as the grant runs.
All right, thank you so much, Voodoo. Could you just please introduce yourself and let everyone know what bank you're with and how long you've been in the business?
Sure. My name is Buru Khan. I work for Nationwide Mortgage Bankers. I've been with Nationwide probably like 8 years now. Altogether, I've been in the mortgage business for between, I think it's about 27 to 30 years. I'm not really so sure. Um, Prior to that, I used to be a manager of a commercial bank. Um, that's my background.
Awesome. And can you explain a little bit more in depth about the home buyer course that the potential home buyer would need to go through and what that looks like?
Okay. I took the course first of all, just to have an idea as to what they do. And the home buyers course that they go through with you is they talk to you and they prepare you for, are you mentally prepared and financially prepared to buy a house? So they would ask you to do a budget. They would talk to you about why it's important to hire a real estate agent, what a real estate agent does for you, what is the benefit of hiring a real estate attorney, what a real estate attorney does for you. They would also go into details as far as why you need an inspection, the purpose of an inspection. So it's more an educational course that they give you so that you would know, are you ready to buy a house? Most people think that, okay, the mortgage payment is $4,000. I can afford $4,000. I'm ready to buy a house. And they don't take into consideration the other things that come with it. For example, a $4,000 mortgage payment is not the end of all. You still have life. You still have other household expenses. You still have personal expenses like car insurance, telephone bills, food, a house. You have regular utilities. You have heat, which is one of the biggest expenses out there. But those are the things that go over with you to make sure that you are prepared for those other expenses. So it's just not the mortgage payment. At the end of the day, I hate to say this, but owning a house is not for everyone who cannot afford it. I'll give you, this may sound silly. I had a referral for a client that came my way. The guy wanted to buy a house. I asked him a simple question. How much of a mortgage payment do you want to afford? He said 1,300. I said, what's your income? He said his benefits are 1,500. So sometimes it's just not for everyone. You have to be able to afford it, and you have to make the best decision for you and your family. But the home buyer education course normally is a 4-hour course run over 2 days. That's
Thank
all
you,
I have on the
Voodoo.
home buyer course.
Thank you. So can you just summarize like this page for everyone as far as like the eligibility
Okay.
requirements?
Mhm. The first thing is, like I said, you must be a first-time home buyer. For the HPD grant, a first-time home buyer is someone who has not had an interest in a house over the past 3 years, meaning your name should not be on a deed within the past 3 years. If your name is on your mom's house deed, and you say, but I don't own that house, she just has me just for the sake of if something happened to her. Well, HPD doesn't care about that. Why? Because your name is on that deed. You are a homeowner. The second thing is this has to be a primary residence. You cannot say, well, I'm going to buy a house in Brooklyn to rent it out. No, this is first time home buyer, primary residence only. I just mentioned you have to take that home buyer education course and you must utilize private financing from an HPD approved lender. HPD, an approved HPD lender in New York is any one of those commercial banks we have out there. You can go to Chase, you can go to Bank of America, you can go to Wells Fargo, any one of those guys. They are approved to give you a mortgage using this grant from HPD. Apart from those major lenders out there, no mortgage broker in the state of New York is approved to lend using this HPD grant. As far as I am aware, we, as of last year, we were the only mortgage banker that was approved to facilitate a mortgage using this HPD grant. There was one other company that was approved last year, another mortgage bank. However, I do believe as of last year, they got dropped off. I do not know whether they were added back this year, but as of last year, I know we Nationwide was the only mortgage banker that was approved to fund mortgages using this HPD grant. The second thing inside that they mentioned is the annual income household, which should not exceed 120% of the gross AMI. I don't get too much as far as what the area median income is. All I'm going to say is there is a chart that tells us based on your household what's the maximum income that you can qualify for. I think we have it on the other slide coming up. There were a couple other items inside there. Number one, you cannot buy a house whereby you have a relationship with the owner of the house or the seller of the house. In simple language, you can't buy a house from your cousin, you can't buy a house from your uncle, brother, father, whatever it is. In addition to which, you cannot buy a house that needs repairs. The house has to be move-in ready. And even though FHA requires a minimum credit score of 580, NHS, or rather HPD, requires a minimum credit score of 620. If you can go on to the next slide here. Like I mentioned before, the property must be located within the boroughs being Brooklyn, the Bronx, Staten Island, New York City, Queens. You can use the funds to buy a one family, a two family, a three or a four family house, a co-op, or a condo. NHS or HPD would require a home inspection. The home inspection must pass HPD's requirement. I was told that as long as the house is habitable and does not need any repairs whatsoever, the house will pass NHS or HPD's home inspection. Okay, so I'm gonna the loan terms. The amount of the grant that you get, then they refer to the grant not as a grant, but rather they refer to it as a loan for one simple reason. If you do not live in a house for the required period of time, you would have to pay back some or all of it. So the max amount of monies that you would get is either 20% of the purchase price or 100,000, whichever is less. If you were to find a condo for $450,000, 20% is $90,000. That's how much you would get for the grant. If you find a house for 650,000 or 600,000 hypothetically, 20% is 120. The max you're going to get is $100,000. There are two loan terms we have inside there. If you get less than $40,000 and if you get more than 40,000, well, I hate to say this. You're not going to find anything in New York where you're going to need $40,000. Chances are the average price of a house or a condo or co-op out there is $400,000. So the minimum you're talking about out there is going to be greater than $40,000. This loan does not have an interest rate attached, meaning there is no repayment. It's all or nothing. If you live in a house for less than 15 years, you will have to repay some or all of that grant amount of monies. There is one fee. It's a non-refundable $1,500 fee, and they refer to it as the application or processing fee. You have to pay for that out of pocket. But listen, you're getting $100,000, $1,500 is, I don't think it's going to be a great deal inside there. The grant can be used towards your down payment and closing cost. So if the client has only 3%, and the closing cost is 5%, then we would use 2% of that grant money towards the closing costs, and the other 98% we can use towards your down payment, or whatever manner we see fit that benefits the client. The minimum borrower's equity, no, you can go ahead. I saw this. The minimum borrower's equity, the borrower must come up with 3% of their own money. Here is the household income compared to the family size. And it goes from a one-person household to an eight-person household. NHS, who administers this grant for HPD, would ask the borrower for the past 2 years' tax return. And based upon the dependence on the tax return, they would judge how many people is in the household. So if you have a husband and wife filing a joint tax return and they have two dependents, you automatically fall under the four-person household, and the max income that you will be allowed to make to be considered for the grant is 194,400. If you're making less than that, you automatically qualify. You make more than that, you would not qualify. The price limits. I'm going to just mention one thing. The limits that they have advertised here was the limit for 2025 to 2026. This limit changes every time it's FFHA. Once the banking department gives you the new conventional limit for New York, then HPD changes their numbers. I know the new loan limits for New York I think they're out already. So I'm expecting by the end of October, beginning of November, for HPD to increase these limits here. But for now, you have the borrowers inside there, and you have from 1, 2, 3, and 4 unit. Obviously, the co-op and the condos will fall under the 1 unit. So for the Bronx, a one-family house, you cannot purchase a one-family house for more than 636. In Brooklyn, it's not, you cannot do it for more than 712. In New York City, it's 636. In Queens, it's 684, and in Staten Island, it's 636. But like I said, this limit is going to change.
Thank you so much, Boodoo. We're going to open up the floor now
Sure.
to all of the invitees who have graciously joined this webinar. Do you
Sure.
guys have any questions, comments, or concerns before we answer the questions that have been placed in the chat? Feel free to unmute or type in the chat your question. Okay,
Hello.
I'll take that as an. Do we have one?
Yes, I do. Hi.
Hello.
Yeah, hi. I'm Latasha. I put a question in the chat. What if you owned a co-op before
How
and
long ago?
you sold the co-op, but you're looking for a home,
How long ago?
like a year ago?
No. You cannot have an ownership interest within the past 3 years.
Okay, so that's all I needed to know.
Yeah.
Thank you.
Don't worry, Latasha. As soon as that 3 years is up, we got you, girl.
No,
I'm actually looking now.
Okay, well, we still got you. Don't you worry. There are other programs. Don't worry. There are other programs. Don't
Right.
you worry. And we'll reach out to you after the chat, so don't worry.
Thank you.
Champagne asked, oh, can the chart of the household income be put up again? Champagne, were you able to grab a screenshot of the household income? Okay, let's hope.
She said yes, she was.
Okay, perfect.
Hi.
And then is it possible to have a copy of these document bulletin points? Absolutely. Everybody who joined tonight will receive a full PDF. All the information that was included in the slides, as well as some additional information, will be sent out to your emails.
Okay, that's what I was about to ask.
Oh, perfect.
Yeah.
Does anybody else have any questions?
Yeah, I have a question for how often do you see these things go through?
This grant has been around for a minute, and each year as we go by, the grant increases. For this, for the past 3 months, I personally have closed 3 loans using this grant. Um,
Awesome.
Unfortunately, all 3 were co-ops. I hate to say that. Um,
Well, that's okay.
That's good.
well,
I think
it's
maybe is it because of the price point?
no, no, no. It was. I'll give you a horror story, and I hate to say it like that. We had a client who went to another mortgage bank, and she had gone into contract. She was buying a house for $490,000, a co-op for $490,000. Spent a lot of time with them
Mm.
thinking that they could have closed the loan for her. Unfortunately, when the file went back to HPD, they realized that the lender was not approved. So the file had no choice but to come over to us. When it came to us, by that time, we were getting time of the essence and all these type of nonsense. And I'm sorry, I'm using terms that you guys may not be familiar with. The seller was saying to her, "You wasted enough of our time, and we are not willing to extend the contract any longer for you." So we had to beg them that we just started the process. Give us a minute. When we finally got everything resolved, the buyer unfortunately had already booked her vacation to go away for 1 month. Needless to say, it was a real hairy situation at the end, but we were able to close this deal. I think it was like 3 weeks ago. The lady was able to get $98,000 grant. $98,000. Um, it
Clap it
was
up for that.
Yes.
No, no, it was
Awesome.
yeah, and again, a lot of people, get sidetracked by a lot of things, and I'm gonna tell you guys, and I'm not selling real estate, I'm not selling anything, but I'm just gonna be as real as I can be with you guys. The biggest challenge that we have in New York right now, especially within the boroughs, is most of us don't make enough money. Most of us don't have enough money, and
Hmm.
sometimes our credit may not be the greatest.
Right.
Here, here is why this program, a lot of people are not aware of it. Number one, the big banks out there are not going to advertise it. Why? Because most of the loan officers are not aware of it. Number two, the local mortgage brokers around the corner, because they're not approved to use to fund these grants, obviously they're not going to talk about it. And most of the mortgage bankers, or all of the mortgage bankers in New York, will not talk to you about this grant because, again, there's no benefit for them. They cannot fund loans or mortgages using this grant. But here's what I'm going to say to you. I'm giving you access to $100,000 to buy a house. I'm giving you off the top $100,000 in equity.
Hmm.
Who else is doing that out there? Not only that, if you live in this house after 15 years, that lien, or we call it a silent lien, comes off your house,
Completely.
totally off your house.
Hmm.
A lot of people might say, well, you know, in Queens, I'm not going to find a house for $684,000. This grant is not to buy a mansion. This grant is to let you go into a house. It's so that you could afford something that you could pay comfortably every month. It is not for people who are making millions of dollars. It's not for people who are looking to buy mansions out there. It's
Mentioned it.
for a regular family. I call it, forgive me, it's like a borrow re rehabilitation program. They just want people to buy houses, to have affordable housing within the boroughs. Can you find one family for 684 in Queens? Absolutely,
Yeah. Hmm.
depending on the neighborhood.
Hmm.
Depending on the neighborhood. I'm not going to take you guys to South Ozone
Jamaica
Park.
Estates.
I'm not going to take you guys to Cambria Heights, in certain parts of Cambria Heights. No, I'm going to take you guys where you could afford. The most important thing with me is affordability. I don't care how much you could afford to buy. Can you afford that mortgage payment? If you could afford this mortgage payment, that's all I care about.
Okay.
Your
All right. So
question in
we
the
have
chat.
another question for you, Boodle, in the chat. And it
Sure.
says, does this grant or loan have a stipulation against using other grant loan resources in addition at the time of purchase?
No. No. When you take that home buyer counseling course, that not the home buyer course, they do talk about that you can layer this grant with other grants.
Mm-hmm.
They, I'm going to be very honest. I can only speak about the HPD grant. So the other grants that they may talk about, I have no idea about it. I sort of stay in my lane. Um, but I was told that most of the other grants, let me just mention one thing. When I took the home buyer seminar course, the counseling agency that I worked with was a company out in Queens called Margaret Counseling Service, and they said that they had grants for up to, I think it was $40,000. I took the course on a Saturday. The Monday morning, I called them to find out about their grant. And I was told, in as simple as it gets, oh, we don't have any more money. They just got $100,000 and 3% to use it up. So when people say they have access to other grants out there, we have to really be looking at, does those grants have monies? Does those grants have monies? I could draw a parallel about the Long Island Housing Partnership, who always runs out of money. But Long Island Housing Partnership is only for the Nassau County, Suffolk County. But to answer the question in its simplest term, yes, we can use other grants together with this particular grant. My part of it is I am only affiliated with the HPD grant.
Understood. Understood. If there is
I
anyone else
got
who
a
has any
question.
question, please ask. Don't, no question is a stupid question.
I have a
Justin, go ahead.
question.
Hmm.
What if a client has, say, 300,000 already? Does that matter that they have money already? Is there like a certain type of asset that they can't have?
Justin, I'm gonna tell them to hide their money.
All right, cool. I didn't know. I just
No, 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 no. I'm going to tell you because this, it's not written on the guideline, but I did attend one of their courses recently. They used to do an 80% AMI before they took it up to 120. When they had the adjusted median income at 80%, you could have any amount of monies. Since they took it up to 120%, now what HPD is saying is that you cannot have more money than the income per household. So for a four-family household, the income level is 194,400, which means as far as they are concerned, they do not want to see you, the borrower, having more than $194,400 in your bank account.
Gotcha.
So I'm going to say to you, if you have 350,000, you better show me less than 194.
And that's cool. I got a question, right? I appreciate
Right.
I appreciate the transparency, right? I have a question, right? Is this program anything like NACA where they like pry all into your stuff and they want to do like an asset search and stuff like that or no?
I don't know how NACA operates, to be honest with you, but I'm going to tell you.
NACA wants everything.
No, 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 but I'm going to tell you what they
NACA wants
want.
your soul.
No, well, I'm going to tell you what they want because I have, thank God I made a fantastic personal connection today with a counselor from the Brooklyn office. Each each borough has their own counselor that does the one-on-one to qualify you. And what they ask you for is they would like you to fill out what they refer to as an intake form, which is a regular application telling them about you, who's in your family, how much money you make, and all this type of nonsense. And then they ask you for your past 2 years federal tax return. If you're self-employed, they want the past 3 years. In addition to the past 2 years federal tax return, they also want the past 2 years W-2 forms, the past 60 days, I believe it is 60 days, pay stubs, and the past 3 months bank statement. In addition to, they do not have this on their website, but I'm going to tell you they would want it. They want a copy of your U.S. passport or green card. Over the past month and a half, I believe it is, um, the current administration that we have in place has decided that they are not going to give any federal loans or any federal monies to people who are not U.S. citizens or green card holders. So for people who have work permits, I'm sorry. I'm sorry about that. Once you submit those to them, they will run your credit because they have to verify that your credit score is over 620. They want your pay stubs, your W-2 forms, and your tax return to verify your income. Your tax return will verify the number of dependents you have so that they can tell what your family size is. Your W-2 form and your pay stub is going to justify do you fall within their income limit. Your bank statement verifies to them that you do have 3% of the purchase price in your pocket. So yes, that is what they want from you. Now, I don't think they're going to ask you, well, where did this large deposit come from? But they do want to see a bank statement to make sure that you have at least the minimum contribution.
Okay, thank you so much, Boodoo. I posted in the chat, I said, ask every question. Now is the time. And we got one. So someone says, what if I want to add someone to my feed, but not my mortgage?
To the
Will they
deed.
allow?
The deed.
I believe the deed,
Yeah.
yes. Do they allow that?
No, whoever goes on the grant application has to be on the mortgage as well as the deed.
Got
I
it.
think her question was, can she add somebody additional?
Can she add someone to her deed after the fact? The answer is no. So hypothetically, if Keisha Bernard and Buru Khan were to apply for the grant together, they would be on the grant application, they would be on the mortgage application, and they would be on the deed. We cannot add Alonzo Macklin after the fact onto the deed.
Can I ask you a question?
Sure.
Does that apply even if I stay as the primary residence for 15 years? After the 15 years, can I add someone to my deed?
After the 15 years, you can do whatever you want.
Got it. Okay, perfect.
I got another question. As far as when it comes to co-signers, right? Say you have somebody and they qualify, but they want to add a co-signer on it. Does the co-signer have to qualify as well, or
Whoever
just the
is on
name
the mor
borrower?
whoever is on the mortgage application has to be on the grant application,
Gotcha.
and they have to be on the deed. So if hypothetically, Justin, if your income is $80,000, you automatically will qualify for the grant if you want to buy a one-family house in Queens. But that's just the grant. You still don't qualify for the mortgage because you know this. It probably takes like maybe 110 to qualify for a mortgage. If you would ask me to co-sign with you so that you would qualify for the mortgage, the grant people would have to add my income to your income to see whether we go over the threshold, number one. Number two, you cannot have non-occupying co-borrowers. Whoever is on that grant application has to say or state that they will be living in that house. In addition to which, their names must be on that deed.
We have another question. It says, what deed stipulations can be put into place at the initial deed signing in order to protect asset ownership of all parties invested?
Good
Oh,
question.
that's right. That is a great question.
Well, the easiest answer for that again is if me and my wife were to both apply for this grant and the mortgage and the deed, what protection do I need? What protection does my wife need? We have to remember one thing. This is an above board legitimate grant we are applying for. So if me and my wife say we're going to apply for the grant, and is obviously we're going to be on we're going to apply for the mortgage together, our name will be on the deed. So there's no there's nothing to protect there. If me and my daughter were to apply for the grant and apply for the mortgage and be on the deed, there's nothing to protect there. It's it's jointly ours.
Mhm.
Or am I missing something?
So, in addition to the question that he originally asked, he added in the chat that not all real estate investments are family oriented. And I just want to make a reiteration that again, this is not a grant slash loan slash lien for a real estate investor. This is for
This,
someone who is
right,
looking to get their first home,
right.
who is just making ends meet, and who needs some financial assistance on the purchase of their first home. If you are looking to make an investment, I don't believe this is the loan for you because again, 15 years, this will be a 15-year long investment.
In addition, whoever is applying for this grant or this mortgage together with you will be equally entitled to that house. So if I'm going to use a friend around the corner to help me qualify for the grant and qualify for the mortgage,
Mhm.
at the end of the day, they're going to be on that deed as a joint owner. It's not
Yeah.
going to be 99% to 1%. It is
Mhm.
going to be joint owner with right of survivorship.
50-50. 50-50.
That's right.
Yeah. Yeah, so again, like Budu mentioned, guys, this is for the working people, you and I, who need assistance, who don't have a whole bunch of liquid, a whole bunch of cash on hand, who need some help with a down payment, who need help with closing costs and miscellaneous things. It's not for the person who already has two, three houses or looking for
Mhm.
their next investment. This is not the grant for you. This is strictly for people who are looking to purchase their first home and who need some assistance. Anything other than that, please prepare yourself to have, a 15-year investment. There's some more questions in the chat, but I'm going to mention them to you now.
Sure.
So someone said, I think you mentioned, Cassie, I hope I'm saying that correctly. I think you mentioned the lien comes off after 15 years. If I don't plan to live in the house no more than 10 years, it doesn't come off after 10 years? Question mark.
No. There is, hold on a second. After 6 years, after you've owned the house for 6 years, I hate to use this term, but it's like almost a prepayment penalty. After the sixth year, if you sell that house, you have to pay back 90% of the grant, so I'm going to use $100,000 as an example. So after the sixth year, you pay back 90,000. On the seventh year, you pay back 80, 70, 60, and you go down the road. So if you live in a house for 10 years, that means that you still have 5 years left. You got to pay back $50,000.
Do you have like a chart on that?
It is there is something online with it. I can absolutely send it to you.
Don't worry
Um,
about that, Boodle.
no,
It's
no,
going
no,
to
no,
be
no.
included in the email that everyone gets after the
Yeah,
seminar is
it's
ended.
right. If you go on to New York City HPD program, it breaks down everything. One of the reasons why I didn't want to get into it is, Justin, for you and I, it's very, very easy to deal with. But when you have first-time home buyers out there who are not familiar with a lot of these type of things, it gets a bit complicated. So I try to keep it as simple as possible. But
Okay, so
yeah,
the person, sorry, Voodoo, the person who asked the initial question about the ownership split, they clarified that they are looking to gain help. They're not looking for an investment. However, they are wondering if they can stipulate a 60-40 ownership or does it have to be 50-50?
it has to be joint. There's no percentage. It's joint with right of survivorship 50-50.
Okay, yeah, okay, got it, understood.
That's a good
Does
question.
anyone else have any questions? Anybody
So
else?
with
Any
the
misconceptions? Justin, you saying something?
yeah, I was gonna ask with I guess with the grant, I know it's 100K down, right? Um, is there like a certain amount of money that they give you? Say, for example, can you qualify for 50 and not for 100? Can you qualify for 60 and not for 100? Or do they typically qualify you for everything?
It's all or nothing. It depends upon your income level. The income level for one person is $136,000. If you make less than $136,000 for a one-person household, you automatically qualify for 20% of the purchase price up to $100,000. So if you buy a condo for $400,000, 20% is $80,000. If you buy a house for 600,000, 20%, which is 120, they would cap you at 100,000. So it's an all or nothing 20% or 100,000, whichever is less. But just remember one thing, and I just want to make this clear. To qualify for the grant, there's no debt to income ratios. There's just a straight simple thing. How much how much money do you make? How many people in your household? Now we still have to qualify for the mortgage. So don't think that because you automatically qualify for the grant that you would automatically qualify for the mortgage. It's two different things.
Okay, I see that there's no more questions in the chat. Does anybody that's on live want to verbally ask a question?
Can you go back to the slide where it shows you the I guess the breakdown for the household?
Absolutely. Is this the slide that you're talking about, Justin?
Absolutely. Thank you.
And guys, while you're in this Zoom, if there's information that you think that you may forget or that you'll need to know in the future, please feel free to screenshot this. This is not a situation where we're hiding anything. Screenshot it. Again, like I said, you will get all this information to your email that you signed up for once you joined and registered for the webinar. You'll get access to this entire slide. You'll also get, PDF files for additional information from HPD that you may need. And especially if you are looking to start this process rather soon, we will be reaching out to you guys directly. So anything that you want, if you need me to pull up another slide, about anything that you have, and no question is a stupid question. Please ask everything while we have access to Buddha, while we have him on. He's a very busy man. Please ask him everything that you guys want to know. Now is the time.
I have a question.
Shoot.
Say for the two-person household, if one person's income and their credit score is greater than the other one, would that disqualify them from the loan and the mortgage?
I they You didn't give me enough information to give you right answer, so I'm going to ask you what type of credit score are you talking about?
Like say one person has a credit score close to the 800s and the other one is like maybe in the 500s.
Okay. The grant requires a minimum credit score of 620. So for the person whose credit score is less than 620, obviously they would not go on a mortgage, but their income would definitely count when it comes to the household income.
Okay.
Yes.
I guess that's why I was asking about the question with the
Yeah.
deed because one person.
I
Yeah,
just
okay.
had that right. I just had that happen to me, and I was able to have that clarified. The guy was self-employed. His credit was not the best. Not his credit. I'm sorry. He had so many debts that he was going to hurt the loan, and his wife wanted to know, can she use herself because she made a decent income? And I was able to verify that yes, we can use the wife, ignore the husband. He was only making, all self-employed people, he was just making $10,000 a year on the books. So they did not go over the 155 limit. But she by herself was going to easily qualify for the mortgage. So depending upon the situation, we could avoid using one of the other parties.
All right. Thank you so much.
I want to add, thank you, Raquel. I want to add that if anyone joined via the public link, if you did not register and you still want access to the information, the presentation, all the additional information we'll be sending to you guys, please drop your name and email or phone number. That way we can get everything over to you once the webinar is complete. If we don't have your information, there's no way we can send you over all of the gems that were dropped in this webinar. And we want to make sure everybody gets all the information so that we're able to help as many people as possible. Last call for questions, comments, concerns for Budu or either of the three realtors that are on this chat, including myself, Shakira, or Kaisha. If you guys have real estate questions that are general, you can ask those as well. It doesn't have to be specific to this grant. So if you have questions, whether it's about obtaining a mortgage or the home buying process, period, you can ask those questions now as well, and we'll be happy to answer any questions that you guys have. I'll give it a few seconds.
Whilst we're waiting for that for the guests inside here, I just want to reiterate the same conversation over and over. How often do we come across any municipality willing to give us $100,000 to buy a house?
Not
How
often
often?
enough.
They're not asking us for anything in return except make sure you live in a house for the next 15 years. I ran numbers. I'm sure a lot of you guys are very numbers oriented. The average single family house out there in the boroughs are probably going for like 650. Our average clientele is putting on minimum down payment and paying their own closing cost. If I can get you $100,000 to put down towards the purchase of that house and you just have your closing cost, your mortgage payment on the average, assuming the same real estate taxes, the same homeowners insurance, and the same interest rate across the board, simply because I like to compare apples with apples, your mortgage payment is going to be approximately $800 less a month. That's a huge savings by using this grant. In addition to that, instead of needing approximately $130,000 in income to qualify for an FHA mortgage, you probably just need just over $100,000 to qualify for this mortgage using this grant. And everyone knows this. Now the federal government and Freddie and Fannie Mae have allowed us to use accessory dwelling unit to count towards qualifying. And that income does not count towards the income limit. So if a person is making $94,000 a year and they need $110,000 to qualify for that mortgage, we can get them a house that has an accessory dwelling unit and get that rent to make up that difference so they would qualify. I'm giving people this opportunity. This is 2025. Let's assume it's the beginning of 2026. If you buy a house for $650, in the next 4 years, at the beginning of 2030, that house should be worth at least $800, $850, the rate real estate is going. You would have just picked up a $350,000 equity just by taking advantage of this program today. I'm saying if you have the opportunity, buy for one simple reason. No one knows what the future holds. It's an opportunity. Somebody's giving you 100,000. If you could afford it, go and buy. And I promise you, for any one of you who have met me, I'm an old man. I don't lie. I don't need to lie. I'm very honest. I will answer any question, every question, anytime.
Okay, thank you so much, Voodoo, for all that great information. I don't see any more questions in the chat, so I would assume that everyone's questions were answered. You have another question?
No, I was saying hi to you.
Oh, hi.
This is
Hi,
Reverend.
Reverend Macklin. How you doing? Yes. So, thank you. We want to say thank you, to everyone joining us. We do hope that, you guys got all the information that you needed and you guys are excited, to, maybe utilize the program if you can. What's the worst that can happen? Try to utilize the program and, purchase your first home. And we will definitely be reaching out to all of you and sharing the slides with the additional information and to see how else we can assist you guys. And once again, thank you so much, Voodoo,
My pleasure.
for taking the time to, share this knowledge with us.
My pleasure.
Aisha, you want to say anything?
All right, guys. So Boodoo's information is here on the screen, and we really look forward to assisting you guys through this program. Like Shakira said and Lemae said, if you guys have any questions, we are going to be reaching out to you guys directly, probably by tomorrow, to see how we can get you guys started. And if there's no other questions, we're good to go.
Reverend Macklin, this is excellent for you and your community.
Yes.
Yes.
A lot of people don't know what they could afford. A lot of people don't know if they can even buy because simply they are scared of the process. You have that congregation. It's all about, and I hate to use this term because it's a lot of people misuse it. It's all about generational wealth.
Exactly. Yes.
You can get people $100,000 to start off a life or their life. And again, you can, all the information that I'm giving you, you can go online and verify it. There's no gimmick, there's no tricks about this. It's all
And
legit.
Voodoo,
It's in
what's the website that they can also view this information as well?
you can just go on Google and type in, I'm going to be patient. Hey, Justin, are you ready?
Yeah, I already got the site pulled up. I'm listening. I'm ready.
Okay, the site is NYC space HPD space grant. It's the Home First program. Just click on it, and that's all that information that you see put up here tonight is right there.
And guys, if you have anyone that you feel like this program would be great for them, if they're looking for some assistance, please feel free to reach out to any of us so we can go ahead and assist them. Because right now, the climate that we're in, we all know that it's really hard to just even purchase a home. So we're here to assist and help everyone through this process and hopefully get everyone that 100K so that they can qualify for, their first home.
I just dropped the link in the chat, y'all.
Thank you
Thank you so much, Justin. All right. So if there's no other questions, thank you so much for joining tonight, guys. And we look forward to hearing from you all. Thank you so much, Voodoo.
Thank you so much.
That was
Take
good,
care.
man.
Bye.
All right, guys.
Take
Have a
care.
good night.
Bye bye.
You
Good night,
too.
guys.
Bye.